Hi, welcome to Value Invest Asia 2-minute stock analysis. Today let's explore if buying the STI ETF is a good idea. If you're just starting out in your investment journey, you might hear investors talking about buying the index or tracking the benchmark. What does that actually mean? It simply means that instead of spending time to researching and understanding individual companies and stocks, you can also invest directly into famous indices such as the S&P 500, Hang Seng Index, and also the Straits Times Index. In Singapore, the Straits Times Index is a key index that investors tend to use as a proxy to see how well the stock market in Singapore is doing. So the STI, as it is also known, tracks the performance of some of the top 30 stocks listed here in Singapore. And instead of going through the trouble of researching hundreds of stocks just to find a few that you like, you can also simply invest in the STI and track the performance of some of the largest corporations listed here in Singapore. And how do we actually do that? So we can do that by buying what we call an ETF. And an ETF is short for Exchange Traded Fund. You can sort of think of them as a unit trust, but they are listed like stocks on the exchange itself. So in Singapore, there are two ETF that actually tracks the STI. One is the Spider STI ETF, and the other is the Nikko AM STI ETF. Both are what we call passive ETF, where they merely just invest proportionally to what the STI is fixed at that time. And as the Spider STI ETF is the larger and more liquid of the two right now. So if you invest in the Spider STI ETF, your invested capital in it will be split roughly about 16% in DBS, 13% in OCBC, 12% in UOB, and another 8% in Singtel, which these four happens to be the four largest constituent on the STI. And what's more is that most ETF tend to have much lower fee compared to unit trust. So at the end of every year, you'll only be paying the fund manager about 0.3% of your invested capital for managing that fund. And buying the index can be a simple and straightforward way for investors to really start investing. And the long-term track record of the STI ETF has been pretty decent as well. In the past 10 years, in fact, the STI ETF has returned roughly 4.6% to investors on average a year. And now the STI ETF is trading roughly about 11 times price to earnings ratio and giving a dividend yield of about 3.5%. That's it for our 2-minute stock analysis. Do you like the idea of investing passively through the STI ETF? Share your thoughts with us below. If you'd like to keep up to date with our latest video, do subscribe to us on our YouTube or Facebook page. And of course, if you like this video, we hope you give us a like and share it. Till next time, invest safely.